am Realtor Stephanie Hill. I am licensed in DC, Maryland, and Virginia, and I would love to help you with your home ownership goals or your real estate goals in general, whether you're looking to buy, sell, or invest here in the DMV. And today we are going to be talking all things mortgages. So I call this Real Estate Mortgages 101. And I have one of my favorite lending partners here with us. Her name is Jerry Benner from Fitzgerald Financial. Say hey, Jerry.
Hi, everybody.
And today we're going to be talking about all things mortgages, how to get them, what kinds of loan types might be best for you, and any other questions that you may have. And so, Jerry, just to prep you, we got some questions from Instagram earlier.
Okay.
And so I have those queued up and I am ready to go. So let's start it off with when someone is ready to purchase a home, right? And, you know, we know that one of the first steps is applying for a mortgage. What kind of documents do people even need to gather in order to prepare for that mortgage application?
So I call it my rule of twos.
Okay.
I need 2-year W-2s.
All right.
I need, and all W-2s, 2 months bank statements. That's all pages, all accounts,
Okay.
and 2 months pay stubs, all in consecutive
bank
order.
Statements, pay stubs, and tax returns.
W-2s.
W-2s.
If you're self-employed, I need the tax returns with all the schedules and the different business returns if they're separate business returns.
Okay. What about like when we get into that spring market and, you know, tax season is coming up, but it's not quite here?
That's a little dicey.
Okay.
So you need to do the last 2 years. If you haven't filed your returns, it's the last 2 years returns that you filed. Plus, we're going to get a profit and loss year to date. Okay. The profit and loss doesn't have to be audited by the CPA. It can be something from your, QuickBooks Online or whatever you use for your banking software.
Okay. So one thing to kind of preface when folks are getting ready to apply for a mortgage, that I like to say, like, don't hide anything. Like the bank knows
Tell me all. Yes.
They know all, and they should know all, because you want to make sure that you're financially prepared to purchase a home, right? And so when they're asking for these documents, I know sometimes it may seem intrusive and people say, oh my gosh, why do they need all that stuff? But they're really trying to make sure that you're in a good position to purchase this property.
Yep.
So, make sure to tell your lender everything. And when they ask for things, please give them to them in a timely manner. Because
and the other thing too, also about the self-employed, we work off a net. Okay. So self-employed people have a bad habit of writing everything off under the sun. So there's only a few things that I can add back. So just know if you write everything off, it could come back to bite you in the butt and really affect what you can qualify for.
Okay. But this is another area where talking to the lender and having that candid conversation with them will be helpful, because you don't know what you don't know. And instead of, being fearful, it's good to just have that conversation with the lender and help them and allow them to walk you through all of your options. Okay, Jerry. So when they're preparing these documents, like, this is a lot to keep track of. Do they send this stuff like in a Google Doc? Like
No, because that's not secure. So the easiest and most secure way is I have my borrowers do an online application at jerrybenner.com. And then through that process, it opens up a secure portal, which you can basically upload directly and securely into your file. It's almost like sending pictures to like Snapfish.
Okay.
You browse, attach, you upload, you send it up. You can upload multiple docs, but that way your Social Security number and all your information, your bank's account, is not floating through the internet. So email is the less secure way to go. The portal is the best way to use it.
Okay, perfect. It's perfect. And do you provide a list of all these documents to them?
They're on my website as well. And then if they're going for one of the specialty programs, there's extra, and I'll let them know like what the extra documents are.
Okay. So once they fill out a loan application, then what happens? Like, do they automatically get a letter, and like what happens?
What happens is I'm going to do the pre-approval. That means I'm going to basically pull credit. I'm going to verify the income. I'm going to verify the assets. I'm going to run them through the automated underwriting system, whether it's a Fannie Mae or a Freddie Mac system. All right. And get my approve eligible. I'm going to do all that work up front, so we know
I think I may have lost your sound, Jerry. Yes, now I can hear you. Okay, so I think what you were saying is you do all of the work up front so that you don't have to do that later on.
Yes.
So is that the difference between a pre-qualification and a pre-approval?
Yes, because a pre-qual is basically somebody sitting with a piece of paper and a pen and saying, okay, you say your income is this. Okay, sure. You say your debt is this. And then they're basically running numbers on the calculator. That's not worth the piece of paper it's written on.
Yeah, we see that a lot. And I know sometimes people will come and they'll say, "Oh, hey, Stephanie, I've done a loan application already through XYZ
Yeah.
Bank online, and I already have my letter." I'm like, did they actually, like, were you assigned a loan officer? Did you
Yeah.
talk to them? So there is a difference. And the reason why that matters, guys, is because in this market that we're in here in the DMV, things are always very competitive, and
Yeah.
people want to make sure that the loan will close. So when they're thinking about accepting your contract and your offer, they want to know, like, how strong are you financially? And the
Yep,
best
what
way
all
to
you've done. And because
that
I do so
is
much, I'll call the listing agent and I'll tell
yeah,
them what I've done. I've got no problem helping to sell because it's a team effort
it
to get that
is.
contract, that offer accepted to get a contract.
It is.
So
It is.
I work together, and Stephanie and I have
Mhm.
worked for a long time and very well. And she knows, like I'll call and I'll say, hey, this is what I've done. So
Yes, and that really matters. And that's what the difference is between the pre-qualification and the pre-approval.
yeah.
And so to that point, once you've, done that and have talked to the buyer or the buyers, is that also the time that you would talk to them about any,
Well,
programs that may be
yep.
available
And then
for?
what I do, so once we're working on the pre-approval, I'm going to step back and say, I'm going to ask them, where are you going to be comfortable with for your
Mhm.
mortgage payment? Because at the end of the day, I still want to make sure they're comfortable. I tell everybody, I'm like, I don't want you eating peanut butter and jelly and ramen noodles unless you want to.
Yes.
That's not going to be on me. All right. And then second, how much money do you have for the down payment and closing costs? Are
Mhm.
you going to need that down payment assistance? Are you going to need special help or, different avenues for different financing programs? So we're
Mhm.
going to take a look at that. I'll let them know how high they can go, but then I'm going to let them know where they need to be looking to be in their comfort zone. All right.
Yeah.
And then it'll be their choice, the house they find. Are they going to want to push it for a little while? Or are they going to want to stay? Because this is maybe just the initial first home and it's not going to be their
Right.
forever home.
Right. That is very
Yep.
helpful, very helpful. So once you had that conversation with them, you guys determined, where the comfort level
Yeah.
is, and you issued that pre-approval letter. How long is the letter good for?
The
Like, is it something they
yeah,
can use?
the letter's good for 90 days.
Hmm.
And then what happens after the end of the 90 days? I get updated pay stubs and bank statements.
Okay.
Okay. And then after a year, the file is pulled by my compliance department. We have to start all over after a year.
Okay. So again, guys, time is of the essence, but I will say that the first step is always just talking to that lender, because you want to make sure that you know where you stand. So
Yeah.
even if you say, "Oh, I need to pay this off, or I need to pay that off," don't do
No,
anything until you talk to the
because I
lender.
may want that cash for something else. Or,
Exactly.
and if when I pull your credit and if your score is not where it needs to be, or maybe I can get you better terms by 5 points more, I reach out to our partner, United One. They do our tri-merge credit reports, and I'll say, hey, what's my cheapest bang for the buck to get the borrower to a 740 or to a 640, because it opens up more programs for them.
Mhm.
Yep.
And so I know that, we may be talking in a little bit of jargon now, but just know that basically what Jerry is saying is start with talking to the lender. Don't make any financial changes. Don't,
Yep.
pay things or do things
Don't
extra
close
until
out
you
credit.
talk to, exactly,
Uh-huh.
until you talk to the lender, because they can help you to establish the right processes in place that it will take to get you to home ownership.
Yep.
Because cleaning up your credit and all of that kind of stuff, it's all relative, and it's all different based on what your goal is. So if your goal is home ownership, then you talk to the lending partner to help
Yep.
you get
And
there.
then I'll walk you through the whole process of what to do.
Okay. So now that we've gotten the pre-approval letter, we know where we stand, we know what our budget is.
Yeah.
Let's talk about these different loan
Yep.
types. Okay. So
Sure.
where are we
We've
there?
got, so you've got a VA, but that's only eligible for, veterans are eligible.
Mm-hmm.
Okay. And it's veteran and spouse or veteran and veteran. Okay. So it can't be a veteran and a boyfriend or girlfriend. Okay.
Okay.
Then you've got the USDA, which you're not going to see much of in this area because that's a rural housing program. So you've got to be in southern like Charles County, northern Montgomery County, western Montgomery County, the Poolesville area. So that's very limited. And then you've got your conventional and your FHA. Now everybody knows about your conventional. The nice thing about a conventional is you can do as little as 3% down.
Mm-hmm.
All right. If you're a first-time home buyer, you tend to get lower interest rates, lower mortgage insurance. Or if you're below the threshold of 120,320, now you can get into one of the affordable housing programs. All right.
Okay.
if we're looking at you for and then I look at usually the conventional now, depending upon which one, anywhere from like a 720 to a 740 and above, I look at conventional.
Mm-hmm.
If you're going to be in that 720 and below credit score range, I then start to look at the FHA program for you. All right. FHA is not credit score sensitive like a conventional is. FHA is going to be a minimum of a 3.5% down. However, we do have now, my bank has 100% financing on an FHA.
Okay,
So,
hold on.
okay.
Let's not gloss over that, Jerry,
All right.
because you said a lot.
Yeah.
But one of the most important things that you just said was your bank has a 100%
Yep.
FHA financing program now. Okay.
So the FHA is a 3.5% down payment. So it's a first mortgage for 96.5. The second mortgage is for 3.5%. So it gets us to that 100% financing. The nice thing about that program is there are no income limits. It is really just FHA loan limits, which vary from county to county, which is going to be like your 722,500 for your conforming loan amount, and then into the 900s for the high balance.
Okay.
All right.
Hold on. I need to pause for a moment because again, I don't think people understand how amazing this is.
Yeah.
One more time, Jerry.
So 100% financing for an FHA mortgage. Okay. The nice thing about this, there's no income limits. So maybe you've got a high income earner, but they haven't been able to save enough for that down payment and closing costs. You got to figure in Maryland, your closing costs are going to run about 3.5% to 4%. And that's on top of the 3.5% down payment.
Yeah.
So by using this program, basically you've got to the 100% and then you just have to come up with the closing costs. But the other nice piece, because it's an FHA, Stephanie's been able to negotiate down payment closing cost help from the seller. And then you can come up with even less money out of pocket.
Yes. Okay, this is amazing. And so you said that there's no income limits and they don't have to be a first-time home buyer.
Nope, they do not. It's basically I have to get that automated approval through Freddie or Fannie.
Awesome. Okay, so we're gonna talk about that a little bit later because I know we have a couple more loan types to kind of discuss. Tell me a little bit about conventional, because I know a lot of people are interested in conventional mortgages because they hear that perhaps sellers may be more interested in those. Which
that is true. All right.
More.
But the thing is, so conventional is very credit score sensitive. So somebody with that upper credit score, they're going to do very well. All right. Somebody that meets that income level of 120, 320 or less, they're going to do very well. All right. But basically Fannie Mae and Freddie, they did these loan level pricing adjustments at the beginning of the year. So everything is broken into tiers as far as like what adjustments to the interest rate there'll be or the discount points to get to that rate. All right. So that's why I'm going to look, when I do that pre-approval, I'm going to look at the whole spectrum. Like, okay, if you put this much money down, this is your sweet spot where you're going to get your best terms. If you put this money down, this is what's going to help. All right. And sometimes because FHA lowered their mortgage insurance this year, they're now more competitive than ever.
Okay.
So, and there's really the only thing, people get leery of the FHA because, they used to have a bad rep. But now they're really just looking at anything health or safety, all right? No mold, no chipping or peeling paint, no broken windows. Well, you don't want to move into a house with mold anyway, So.
That's facts. Very true. All right, so let me ask you this question, Jerry. What's a jumbo loan? I know that I've had some clients who've been interested in getting a jumbo loan, or they thought that because of the purchase price that they were interested in, that maybe a jumbo loan was, what they needed. But I know that those numbers have actually gone up. The conforming numbers have gone up. So jumbo loans,
all the numbers go up. So everybody across the country is going to be at that 722,000. All right. That's your conforming loan limit. Then county by county, you'll go into the high balance world. All right. So there's conforming, high balance, and then jumbo. All right. In the DC metro area, you're getting up to about 922,000. There's like different amounts for different home sizes. So 1 unit, 2 unit, 3 unit, or 4 unit.
Okay.
And then above that, you get into jumbo. Now, when you get into jumbo loans, just keep in mind, it's going to be stricter underwriting rules. It's going to kind of go back to old school, what we used to call, the debt to income ratios of 29 to 41 or, 43 or 45 for your back ratio. They're going to want money for reserves, which means you've got money left over at the end of the day. You've got, 12 months of a mortgage payment sitting in a bank account. All right.
Okay.
So it is going to be stricter underwriting, but there's still a great program. You just have to be a little bit more prepared to know, I got to get all these documents to the lender.
Okay. So if I can summarize, so for a jumbo loan, essentially, unless you're purchasing, let's just say $1 million plus, then likely you may not need a jumbo loan. You can still purchase with any of these other loan types, but you may not necessarily need the jumbo loan product that Jerry just referenced. And then go ahead, I'm sorry.
Yeah, I was going to say, and then in regards to the VA, there is no loan limit. So I've done up to $1.5 million house on a VA loan.
Okay. So let's just talk about VA loans for a moment. So with the VA loans, there's no down payment with those. Anything else,
Nope.
that we should know about with the VA loan?
Well, if you've got a service-related disability, you get no funding fee. So that's like an added bonus, thank you for your service. But there's no monthly mortgage insurance. It's 100% financing. And again, no service-related, if you have a service-related disability, no funding fee.
Awesome.
So
awesome.
the VA is a great program.
And I am a military relocation specialist. So if you are in the military or have ever served, I would be honored to serve you and help you to find your new home. So just want to put that plug out there. Okay, so Jerry, we've talked about, all different kinds of things. We've talked about the different loan types. We've talked about jumbo loans. We've talked about conventional and FHA, what people need to have available when they're ready to submit their loan application. Another question for you about that. How long does it typically take? So from the time that someone submits a loan application until they're
usually it's about a day or two till I get it turned around.
Okay. Okay. So about a day or two. Yeah. And then as the process goes on, so like say we're under contract, right? Then what documents do the buyers need to have available as they continue to go through that,
because they've got that portal, so they're going to keep uploading bank statements and pay stubs as they get them.
So just guys, keep, making sure that you have access to all of these documents. And when you receive these notifications, please, please, please address them as soon as possible. Okay, let me see if we have any other questions. And then if not, Jerry, I am going to bid you adieu. Let's see if we got any more that came in. Boop, 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 boop. We got that. Okay, I think we have gotten everything.
All right.
So, I am going to send an announcement out to everybody via email, and then also I'm going to do another post about the FHA loan program that Jerry referenced with that 100% financing, because that is major.
Because there's quite a few people that are those high income earners that just don't have the money saved up, and it's just the way life is right now.
Absolutely. Okay. Well, thank you so much, Jerry. And we will be chatting again very soon.
All right. Good to talk to you. All right. Bye, everybody.
Bye. All right, guys. So if you're interested in buying, selling, or investing in the DMV, you know that I am your girl. I would love to assist you in that process. And if you have any other questions or want to know something else that we can put as our topic for a future what's going on with real estate in the DMV segment, please drop it in the comments below or DM me. Bye.